Alright folks, how's it going? Should be a short one today, not much to say. But as we can see here, I've done pretty well this week. I'm up 1.74% compared to the bench or the life strategy funds, which are all up by about 0.4. So that's pretty good. It looks like for this year, I'm starting to catch up life strategy 80, but we'll see what happens. And there's the disclaimer. I'm doing appallingly compared to them since 2017. So let's have a look where that performance came from. So Care REIT did pretty well, kind of offset by Gore Street Energy though, isn't it? You know, these things always seem to go in swings and roundabouts. GSK did pretty well, I suppose, nothing too special though. Worldwide Healthcare, yeah, not much to say there really. And in the Fundsmith portfolio, Microsoft and Meta had their results on the same afternoon. I think it was after the markets closed. We had the opposite effects. Meta's up 6%, Microsoft's down 6%. CrowdStrike, Fortinet are doing pretty well. Amadeus, Atlas Copco. Yeah, not much to say there really. But there's the numbers for anyone that is interested. Oh, and on the Fundsmith thing, I reckon at some point in April, when the new ISA allowance becomes available, I think I'll probably do some sort of a rebalance between Scottish Mortgage and Fundsmith. Because, you know, Fundsmith is, Scottish Mortgage is extremely volatile, and Fundsmith at least attempts to be, have a lower volatility than the average fund. So, and they're both very growthy. So I figured these two are a good fit to kind of rebalance back into. Scottish Mortgage has had a bit of a pretty good run recently. Hence it becoming one of my biggest holdings. It was only about 6 or 7% at one point. But then, you know, there's also those massive falls that Scottish Mortgage is prone to. So when those falls happen again, I can rebalance the other way. So yeah, I'll probably rebalance when the ISA allowance is there. And obviously, when that ISA allowance is available, I can sweep all of these little stragglers from, because they're all in Fundsmith-ish portfolio, but they are in the general investment account, so they'll all get swept into the ISA. And at that point, I think I might put the Fundsmith-ish portfolio into a pie, because at that point they'll all be in the same account rather than spread out over the two. And I think maybe using a pie to manage the Fundsmith-ish portfolio might be a bit easier than doing the, I don't know, you still have to do the legwork. If I want to make a change, I still have to go into the pie and adjust the percentage allocation I want. But I don't know if that's easier than actually going in and doing the buys myself. We'll see. I'll give it a go in the new tax year. I try to look as much like a tourist as possible to save that awkward moment of working out that I don't speak the local language. This is perfect. They all go straight into English. They know. And the dividends were mainly just Lowland paid its quarterly dividend of 363 quid. And then the smaller cap 600 S&P small cap 600 US small companies fund paid its half yearly dividend, and a couple of stragglers to add up to 405 quid, which is a pretty decent week. And then what else happened? We also had a dividend announced from Impax Environmental Markets. They increased the dividend to 3.2 pence compared to 2.9 the previous year. So that's pretty cool. And I think for the whole year, that's an increase of 8.7%. So nice progress there. And on Monday, the transactions, on Monday I added 220 quid to ASML. So that DeepSeek, have I said that right? DeepSeek scared all of the AI stocks. So ASML went down. Nvidia was down like 16%, I think, or more. Maybe 20%, can't remember. But anyway, I added, when ASML was down by a decent amount on Monday, I added 220 quid. I couldn't be bothered kind of rebalancing the portfolio, so I just added 220 quid to my from my cash that was outside of the portfolio. So I was feeling lazy when I did this, so I didn't bother rebalancing into it. I just added new cash. And now we can see that ASML's up to a 2.28% position. It was only about 2%, so it looks like I'm guessing it looks like ASML's recovered a bit since its Monday decline. Let's have a look. Not that it really matters, it's a short time frame. Yeah, it's recovered. So on Monday it fell down and it recovered throughout the week. Because before it was only at about 1.4%, I think. So it was due like a little top up to make it like a quote unquote full position. So yeah, from now on I'll just let it run or fall. And then on Thursday, this was somewhat out of the blue, I sold 800 quid of NatWest, 800 quid of Barclays, 400 quid of GSK, and I put 2 grand into UPS, so the parcel company. Because if we can see here, on Thursday there was a massive drop of about 17%. And it's basically because they announced that they were, well, we can see the headline here, can't we? UPS shares plunge on plan to slash Amazon business by half. So basically, their biggest customer is Amazon, and that's about 11% of their revenue, I think. Yeah, 11% of the revenue, I think. But obviously that's on the decline because, as we all see every day on the streets, Amazon have their own delivery network. And so I can only presume that Amazon are gradually taking more of their own business away from UPS. So I guess, I mean, this was instigated, this news this week was instigated by UPS, even though I saw one YouTube video and someone was saying, someone used the words, of no choice of their own, they're losing Amazon business. Which is just wrong, because if you listen to the earnings call, the lady says, the CEO, she says, we instigated this. I mean, I suppose it's no choice of their own in terms of Amazon having their own network and taking more of their own business. That's not their choice, I suppose. But the news this week was completely their choice. They instigated this acceleration of taking less and less of Amazon's business quicker. So they're kind of like, they're kind of ripping the plaster off quickly. Take the pain now. But they said in the call, the only reason it's 18 months rather than like 1 month is to help Amazon. So Amazon don't have this this kind of undersupply of their own network. So yeah, it's kind of like I say, they're just ripping the plaster off quickly, which I like, the fact they're addressing the situation quicker rather than letting it just fizzle out gradually. It seems to be logical. One of the things that encouraged me was they said on the conference call that they estimate next year's, because of this change, they estimate that next year's revenue was going to go down by, I'm forgetting here, right, these are just indicative numbers. I can't remember the exact numbers they said. I think they said 8% revenue reduction next year, but only a 2% profit reduction. So that kind of illustrates that the Amazon business they have is actually a lot less profitable than the other 89% of their business. So I don't know, it seems kind of neutral to good news to me. At least it seems neutral to good, having already had this plunge in the share price. I guess if the price was up there, it is justified to go down. But yeah, so I got in at, roughly there. I got in at about $110. And hence we can see here that I'm up about well, here's the holding. I was hiding it from you before. There's my holding. I'm up about 3.3% already. And obviously all of that was on Thursday because, as we can see, on Friday it was down 0.58%. Yeah, so I had been over the, I don't know, maybe a year, 2 years. I'd kind of kept my eye on it because I saw it in Scottish American's portfolio, and I was like, yeah, people, e-commerce is never going to go away. But I don't know. They could get completely disrupted out of the whole business, couldn't they? Because Amazon do seem to be pretty amazing at logistics, and that's probably what the market's thinking. And who's going to be right? I'm not that confident, to be honest. I might get scared and reverse this move at some point. I don't know. I might do a little bit more looking into it. But yeah, and the kind of trigger point for me was the 5% yield. That's what I had in my mind for the past few months. I was thinking 5% will be good. It's a similar yield to what I got into Pfizer at, and as you can see, the yield on cost is up now because there was a dividend rise and probably some exchange rate benefits that we've had over that time period. UPS hasn't actually announced this year's dividend. They've announced it in dollar terms, but it hasn't been approved yet. So looking at the dollar terms, it's probably going to be flat, I would guess. So I'm guessing that this estimated dividend of 100 quid, which will change with exchange rate fluctuations. That's not setting, that isn't paid in pounds. Yeah, so I'm guessing it'll be flat, or I don't know. I wouldn't be too surprised if there was a cut. I don't know. Similar situation I was in with Pfizer. I wasn't confident that they would continue with the dividend where it was. Anyway, yeah, that's the new buy, and I did a quick. I messed around with a copy of the spreadsheet here, and this tells us all of my moves effect on my dividend. And as we can see, we can see the Impax. The Impax increase adds £9.44 to my dividend, and the moves I made on Thursday have added £28.53 roughly. So yeah, a nice little boost to the dividend income. And who knows? Oh, and here's the chart longer term, just to show what I've been kind of monitoring. I've been watching it go down and thinking to myself, when will I jump in? What I'm thinking there's a decent chance it will go down to like 98 or something at least. Maybe back down. So I'm thinking perhaps if it goes back down to 100, I will probably add another grand, so that the cost basis for it is £3,000, which is roughly what I put into Pfizer and Assura. Yeah, so that's it, I think. So I'll leave it there. All right, have a good one. I'll see you next time. Bye. Bye.